And welcome to the first trading day for this week. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, coming to you live from Channels HQ right here in Lagos. Before we make that trade, let's take a look at what the markets are saying this morning. Starting with oil markets, now see oil prices jumped 4% in early trade as the Israel-Hamas conflict extended into its third day following a surprise attack on Israel by Palestinian militants, Hamas. Global benchmark Brent traded 4.53% higher at $88.41 a barrel, while U.S. West Texas Intermediate crude futures rose 4.69% to $88.67 a barrel. At dawn on Saturday, during a major Jewish holiday, Palestinian militant group Hamas launched a multi-pronged filtration into Israel by land, sea, and air using paragliders. The attack came hours after the thousands of rockets were sent from Gaza into Israel. We'll keep tracking the oil market to see how things unfold there. But over to the metals market now. See, copper prices rose today with support from robust demand in top consumer China, despite a firmer U.S. dollar amid violence in the Middle East. We can see the Israel-Hamas conflict is impacting most markets now, even the metals markets. The three-month copper on the London Metal Exchange was up 1.2% at $8,139 per metric ton. After losing 2.7% in the prior week. That's talking about the metals market, while aluminium was little moved at $2,238 a ton. Tin gained 1.7% to $25,000, while zinc added 1.1% to $2,536. That's how it played out in the metals market. To the grains market now, Chicago wheat prices rose as traders worried about dry weather, shrinking harvests in Argentina and Australia, and Russian attacks damaging Ukraine's ability to export grain. The most active Chicago Board of Trade wheat futures, WV1, was up 1.3% at $5.75 for 3/4 of a bushel, and we recovered from last month's three-year low of $5.40. CBOT corn CV1 rose 0.6% to $4.95 a bushel, and soybeans SV1 was up 0.7% higher at $12.74 for 3/4 of a bushel. And so that's for the grains market. Now to other news, PricewaterhouseCoopers over the weekend projected a 2.8% GDP growth rate for Nigeria in the year and 3% in 2024. According to PwC, the growth in Nigeria's GDP by 2.5% in the second quarter of 2023 from 2.3% in first quarter was caused by the lingering effects of the cash crunch and emerging effects of domestic reforms, namely subsidy removal and foreign exchange liberalization. PwC, however, said the marginal growth projection of 2.8% in 2023 and 3% in 2024 may be due to the emerging effects of the implementation of domestic fiscal reforms by the ministerial and economic management team of the country. And organized labor in Nigeria has described strikes as a negotiation tool of last resort, not as a means of coercion. President of the Trade Union Congress, Festus Osifo, exclusively revealed to Channels Television that the decision to halt the planned nationwide strike was made after extensive discussions with the government and with proof of the government's willingness to make concessions. Osifo also underscored Labour's message to the government about the importance of reducing the cost of governance and their commitment to implementing these measures. Take a listen.
Yes, in the past, there have been a lot of, agitations here and there, but it hasn't led to the fact that Labour is saying that if you don't cut down cost of governance, we will go on strike. But I think we will get there very soon because the people are suffering. And because the people are suffering, now our satellite has been, we have actually increased our reach to ensure that even the areas we are not looking at before, we are going to start paying much more attention to them. For example, you saw what happened with the CBN and the issue of ways and means. I mean, we were not aware. Nobody knew about it. But now that is in the public domain, we now need to pay more attention to that. So the same thing as well. We are going to set up a committee that is going to look specifically on those areas where we must focus on, areas what government can do to cut down the cost of governance. We must have our clear facts. We must have our clear figures so that when we are engaging government, the information is right there. If you just tell them, okay, we want you to cut down cost of governance, and you don't have specifics, it's a problem. But in area of that specificity, we are actually working on it, and I think in the next 1 or 2 months, we'll be able to put all this together and forward it to government, and we'll follow through.
Our first conversation, the Debt Management Office is planning to raise up to 1.2 trillion naira in debt through reissuance of federal government bonds, even as it spent 1.195 trillion naira on paying interest on the FGN bonds in the first 6 months of this year. Data from the Debt Management Office shows that Nigeria's total debt stood at $113.4 billion as of June 30th. In August, President Bola Tinubu has declared that Nigeria will no longer sustain an economic philosophy that ensures the wastage of 90% of its revenue on external debt service. Meanwhile, the Senate talked about a comprehensive strategy. Let's talk now on the details with Emmanuel Onasimi, lead partner at Cardinal Professional Services, joining me right here in the studio. Great to have you. Good morning.
Yeah, good morning, Ladi. Thank you for having me today.
Yeah, so I get it. You know, debt is important. You know, sometimes businesses, especially countries, will need debt to fund, you know, spending most of the time. So, you know, debt in itself is not a bad thing. But where it becomes a problem is when you have revenue issues, I believe. And looking at Nigeria now, how do we avoid using 90% of revenue to fund, you know, our deficits? That's through debt.
Okay, thank you very much, Ladi. Like you just alluded to, you know, debt in itself is not a bad thing. Even the best of economies in the world, you know, they have significant debt. You know, they are running the economy. Debt is an instrument that is expected to be used by the government to stimulate the economy. You know, when you do it in that manner, you are doing it sustainably. You know, you get to a point where you begin to use debt to service debt or debt to service recurring expenses and not infrastructural development that will stimulate the economy. That's where the situation becomes problematic. You know, and there have been a lot of ideas, oh, Nigeria's debt situation is not bad yet. We have not hit our 40% debt to GDP ratio. But why that conversation is true, and I alluded to the fact that Nigeria is still on the path to sustainable debt, you know, structure. But the conversation is how have we used the debt we have received in the past, you know, have we used it for the purpose of economic growth? You know, Reinhardt and Rogoff in 2010, in their publication, they confirmed that, look, the relationship between debt and economic growth or sustainability is non-linear. You know, when your debt portfolio is low and you take more debt, yes, it's expected to stimulate the economy if you put it in the right aspect of the economy. But when you begin to hit higher level of debt, you know, in a manner that is not stimulating the economy, then it becomes problematic. You know, the best way to appreciate the Nigerian situation, Ladi, is to kind of, yes, they said sovereign debt is a bit different from personal debt, but look at yourself. You obtain a debt and all your salaries you use to pay debt. You know, what kind of misery will be going on? You know, that's kind of misery level, you know, that in quotes Nigerians are experiencing because the government have not been able to use debt in a manner that stimulates the economy. Yeah, we have some earmarked debt, like the Chinese debt, you know, based on the DMO statistic that are earmarked to some particular projects. But significant of the debt that we have taken in the past have not been used in a productive manner.
Right, and I do hope that, you know, individuals don't have this kind of problem, because I can imagine, you know, spending 90%
of your income you'll be in misery.
Servicing debt. Even though I know these loan apps, you know, are all over the place right now, and Nigerians are having to deal, you know, with so much debt there. But what comprehensive strategy can solve this, you know, debt issue so that we don't, you know, get that famous kiss of debt on the forehead?
Yeah, so I think the first thing is responsible governance. You know, our government needs to become responsible. And when I mean responsible, we need to be sincere about our economic policy direction and what we want to do for the people. And when I say the people now, the masses. You know, because when you take debt for the purpose of just servicing some personal interest, that is not equal to responsible governance. You know, we need to first be sincere with ourselves as a people and say, government, we want to do this for our people. And secondly, I think Nigeria also needs to toe the direction of other countries that have responded to the situation of the fact that global economy and global income globally is shrinking. And they are looking at their, equity base as a nation, their asset base as a nation for the purpose of opening up, unlocking liquidity. The problem with governance is liquidity. If you can guarantee liquidity, you will be fine. But over the time, we are so fixated on oil revenue as our whole solitary source of income, and maybe where there is no oil revenue, we run to debt and say, hey, so party, come and give me debt, public, come and give me debt. But we need to be more creative. And that's where the economic team needs to have a roundtable, have a sit down and say, how can we unlock liquidity from our balance sheet as a nation? You know, look at some assets that Nigeria have. You know, look at the case of the Nigerian refinery that have been moribund. That is a significant level of assets. Based on the publication made by the Ministry of Finance Incorporated, you know, we have on paper that Nigeria has over 180 trillion worth of dead assets. That is a potential liquidity that can be unlocked if there are deliberate strategic action to unlock those assets. And bulk of those assets are in the real estate. Some of them are, you understand, in equity. You
see most of those empty buildings in Ikoyi.
Do you understand? Right. Those assets can be strategically unlocked for the purpose of enhancing government liquidity. A classic example is the example of the Saudi Aramco. Look at the way the government of Saudi Arabia is unlocking liquidity through the equity of that entity, and more thinking in that direction needs to be happening at the, at the boardroom where they are discussing this issue of debt. Going the route of increasing our debt year on year is no longer sustainable, because what it means is that government will not have the fund to put into economy to stimulate it. So we need to shift our focus and say, while we are still asking oil revenue to go up, can we possibly unlock liquidity with our balance sheet? India has done something like that successfully. I'm also aware that Brazil has done something like that successfully. Why are we not looking in that direction?
Right, and definitely we need, the government needs lots of revenue right now. And as you did mention, that's be creative, at this time to unlock, most of those revenues. But looking at the current revenue, is there a way that the government can manage the current revenue, maybe by cutting its coat to its size and, somehow getting things done even with our current revenue? Because we did hear there at Labour talking about, watching how the government is going to cut cost of governance. How are you seeing that? Yeah,
so sadly, one of the things that aggravated, our debt position is the devaluation of the Naira. Sadly, when Naira became poorer, that means your obligation also was blown up, as a matter of that. So I'm glad that before, you invited me in, you had that conversation from the Labour, trying to hold government accountable on cost-cutting measures. Because the truth is, we cannot say we are not earning enough and we are not looking inward to possibly reduce the cost of governance that is already bloated. You still see some special advisors to governors still running around, with a double-digit number of vehicles, in their patrol, and they are all burning fuels. At that exorbitant rate, that is not sustainable. So we need to reflect and say, at this moment, we need to run a shrewd economy that will unlock opportunity for our people.
And we did see, Sarah also, talking about most of his senators that are former governors.
Also still
shouldn't be collecting salaries as senators.
Because they are still getting their governor's pension.
Right.
And then some form
Can we afford that really at this point?
So we seem to deceive ourselves as a nation like we've arrived. But we are on the way there. And as such, when you are growing a business or you are growing an entity, you don't behave as if you're already a matured business. You know, just like a private business will look inward and say, I'm growing an entity, there are some things that I can't afford, I have to be shrewd in a manner. The same way, we're on a journey to prosperity as a nation. So you cannot be comparing a senator in Nigeria with a senator elsewhere. In fact, the senators in Nigeria are maybe one of the most, you understand, comfortable or prosperous,
quite rich,
rich, senators across the world for a nation that is yet to feed its people successfully.
All right, let's look at this. This is a brand new government, right now. How can they realistically, go about their spending without taking on, more debt, going forward?
Yeah, so like I was saying, apparently there are some, if you look at that portfolio of debt assets, there are some that that they are no longer viable. You have to dispose them. The truth is that privatization or disposal of government assets is not in entirety bad. If you know or you've recognized as a government that you cannot manage or participate in this, you dispose them. Some of them, out of that 180 trillion worth of assets, you convert them into some concessionary arrangement where government has some form of participation. Just like the case of Saudi Aramco I mentioned, equity participation. From there, you unlock liquidity into governance, And I also believe strongly that, there's a lot of things going on in the international politics space. And if people in charge of our international policy are pretty, interested in using the opportunity going on in the international politics space for the benefit of Nigerians, I think we can renegotiate some of our debts. We can also get some other player that wants to have Nigeria on their side to also refinance some of our debts. These are some of the creative things that you need to look holistically, not just from one angle and say, oh, let's just go for the next debt. There are some things that needs to be going on the table for the purpose of making sure that, there is liquid cash to run governance. Because if government do not stimulate the economy, it will go worse. The experience of Nigeria will grow worse, and that will not be good for the nation.
All right, and definitely the macro issues are still there with rising inflation, and we still have the issue of currency devaluation at this time. And we have a new CBN governor. What would you say should be the point of action, going forward, looking at, the CBN leadership right now?
Okay, for me, I think in the past, CBN has dabbled into many things that they ought to not to dabble to. For now, I would advise the CBN governor to focus on monetary policies, and especially when it comes to arresting the falling naira and what can be done immediately in order to do that. Because many things are hinged on that, because Nigeria as of today, is still a net importer. And if you are importing and your currency is the worst among the pack, there is no way you will be competitive within your economy, and your people will be experiencing a significant inflation. The inflation Nigeria is experiencing today, according to MBS, is a food-led inflation. That means that because the price of food is increasing, price of everything will increase. If I have to buy my food 100 naira higher than the price, I will increase my service provision fee. The person supporting me too will increase his own fee. So it's a food-led inflation. So government has to find a way to ensure that, if food is attacked in a way that everybody can afford food, at least, everybody will be sane. And then you can then begin to attack the other aspect of the inflation.
Especially transport, definitely. That's another big one. Well, so much to unpack there. And definitely, I'm looking forward to a time where we see more demand, for the naira and less.
Until we start producing.
Exactly.
And we can't start producing until government begins to subsidize all the factors of production. And that's the real. In any economy all over the world that is producing, the government is deliberate about subsidizing factors of production. Because if the factors of production is way high, your people cannot produce. So that's where, where the policy of removal of subsidy and removal of devaluation of naira may have had significant impact on Nigeria, because the cost of energy blew. All the factors of production were just going aboard.
Right. This government has a lot. So much to do at this.
So there must be drastic efforts to subsidize.
And it has to start immediately at this point. Thank you so much, Emmanuel Nosimi, lead partner, Cardinal Professional Services. Great having your perspective.
Thank you very much, Ladi, for having me. Great.
Thank you. All right, after the break, we'll take a look at what to expect for investments in Africa as AFSIC kicks off in London. That's in a moment. Do stay with us. And AFSIC 2023, that's Investing in Africa 2023 event kicks off today in London with over 1,200 delegates attending the 2 days of high-level meetings, dialogue, and networking focused on investment opportunities in Africa. Let's get a sense of what to expect has kicking off. Joining us now is Abdulrahim, co-founder, STAIRS, joining me right there in London. Great to have you on the show.
Morning, Ladi. Thanks for having me.
Good morning. So you're attending the event, and I believe STAIRS is a sponsor also. What should investors and businesses expect at this year's gathering?
Yes, so we are attending as a lead sponsor for the event, and I believe the key thing that we're seeing, even just from the early conversations we're having with investors, is trying to get a sense of the opportunities in Africa. I think, as we all know, we've seen, particularly with countries like Nigeria, some policy reforms that are essentially making investors interested and potentially giving some new opportunities in the market. So we're seeing that investors are obviously, they still remain interested in Africa. Obviously, the rising tide, everyone wants to tap into the opportunity. But what is key there is essentially making sure that there is effective guidance in how to tap into those opportunities. So what sectors should they be looking at? Financial services, energy, etc. And how do they pick the right market? So are we talking Nigeria? Are we talking Kenya, South Africa? Investors want to know how to take advantage of those opportunities.
What kind of opportunities or sectors would you say investors attending will be interested in? Because I know most businesses, startups are looking for funding right now, but it'll be great to know what fund managers are looking for right now. Where is smart money going?
Yeah, I like the fact that you use the word smart money. I think for us as STAIRS, especially, that word smart money means money that is allocated in a very efficient way. So being very data-driven about where the opportunities are. Financial services still remains a very key area for investors. I think financial inclusion obviously is a very big untapped market or untapped issue in Africa. So we still see that interest in fintech solutions, where we're talking about solutions that enable the sort of unbanked and maybe parts of the continent that don't have strong financial infrastructure to take advantage of solutions like payments, savings, lending. Lending still remains a very big element of essentially unlocking financial opportunities in the consumer markets in Africa. So that is one of the key areas. I mean, another one is, and I guess remains, and also a very pertinent one, considering some of the issues we've seen with the fuel crisis in Nigeria, is energy. And some of the conversations that we're seeing is obviously around how do we go beyond some of our current energy sources. So looking at renewable energy sources that essentially are more sustainable, and how do we make that accessible to sort of all parts of the market as well.
No major African economies are dealing with, currency devaluation issues, rising, unsustainable debt, high inflation, rising poverty. We keep talking about, big opportunities in Africa, but how do we, move from potential to real development for, say, a country like Nigeria?
Yeah, no, I mean, I think we can just zone into Nigeria, and obviously, there's some historical context that has made investors a little bit nervous about going to a market like Nigeria. Some of the policy reforms we've seen around FX, and also maybe even some of the usage of fuel subsidies, has started to maybe turn the tide, although a key concern there is still how some of the policies are affecting some of the consumer market. So with rising prices around inflation and the financial other forex as well, we've seen obviously consumer wallets shrink to an extent. So when it comes to the question of how do we turn some of these opportunities and potential into actual realizable gains, not just for the investors, but also for our continent and also for our country as well. It's actually about sort of trying to get them the clarity that they need to take those steps. So when we're speaking to investors, we often come onto the question of like, how do they manage the risk with investing in Africa? So if I'm putting sort of investing dollars into the Nigerian economy, how do I know I'm going to get the equivalent back when I take my money out in 5 or 10 years? And what we want to essentially see is some of the government stakeholders starting to take more action in providing those investors clear guidance and clarity. Obviously, we do so ourselves with our solutions to customers and trying to help them better guide their investments and also trying to get into the minds of the policymakers. So what is the central bank thinking when it comes to sort of some of the rates and policy decisions that they're making? Because those are things that fundamentally change an investment decision for some of the steelmakers. But for us, and I think for us to basically take advantage of some of these opportunities that we're seeing, we need to shift into a mindset where we're providing clarity to investors about what to expect. I think the more risk there is in the market, the more uncertainty they keep seeing in the market, the more hesitation that we get and the more uncertainty there is around the investment. And that will continue to essentially hinder sort of influx of capital. And I think to the point you made about the debt situation, obviously with the conversation you had earlier with Emmanuel, I think it was very clear that sort of parts of the solution is it comes from policy, but the other way we can essentially address some of the issues when it comes to growth in the economy is actually getting an influx of investments from international capital. So funding infrastructure, funding investments in technology sector like fintech, financial services, and even, for instance, like for development of energy as well. But for that to happen, investors need clarity. They need to understand how they're going to essentially make their money back. Because when that information is out there and when that clarity is missing, you tend to get obviously hesitation and sort of doubts around the opportunity in the markets.
I'm wondering if the investors there, have that mentality of buy, when the market is fearful, and sell when the market is greedy. But what do you think businesses and startups, looking to raise, funds, what do you think they should be doing to, whet the appetite of investors over there?
Yeah, and I actually I have come across a couple of companies who are raising funding at this event, and what is very important, obviously, first is to show up, obviously to actually engage with these investors. Sometimes I think because these events happen outside of Africa, there's obviously that gap where the difficulty in actually connecting with the investors is one issue. So obviously being present is one of the key issues to tap into that capital. And then the other thing is actually making the opportunity very, very clear. So we've had obviously some successes both in the financial, fintech and technology ecosystem to also energy. We've seen some solar powered success in terms of giving access to solar powered technology to the lower class. But I think the best thing I can advise for companies and startups or even organizations trying to tap into those capital is actually how to package the opportunity to an investor. And I think that is obviously fundamentally down to where do the investors make gain? Where is the money coming from? I believe it's very difficult for startups or for companies to raise when an investor is unable to tell how they make their money back. And I think, these are financially driven and so financially incentivized individuals and organizations. I think the best way to also just gain their trust and their interest is simply by telling them how does this become a $1 million or $1 billion opportunity for you? And as soon as you're able to sort of clearly make that case to an investor, it makes it very easy for them to take that leap. But I think as a first step is actually just, being able to connect with the right people, the investors that are sort of focused on the right sectors. And another thing I'd also just I think it's important to also advise to the investors is also thinking about being realistic about the returns when it comes to a continent like Africa, because there is so much uncertainty in terms of investments and also the economic environment and how the policies affect the returns on investment. It's very, very key for investors to think about the use of patient capital. And it's not to say that the returns don't come, but I think it's just being realistic about what to expect when it comes to investing in the African market. There is a lot to navigate and a lot of hoops to jump through as a company operating in the continent. I think we've seen that firsthand as an African company. So I think from the investor side, I think thinking about the patient capital element and also being more open-minded to what opportunities look like outside of the European and the North American markets.
So I see this year Ethiopia is in the spotlight. Why is that?
Yes, Ethiopia has come through some obviously recent political headwinds. I believe, from last year, they had some sort of, civil unrest that led to sort of a difficult economic situation from the country. Now that has been resolved. I think a lot of the one of the focus of the country, and I think this should be the case for a lot of African countries beyond Ethiopia, but it is essentially how do we turn the economic situation. And similar to what I said earlier, I think I know they have like an investment summit here at AFSIC. They are looking for foreign capital to help boost the economy. So they're looking for foreign capital to essentially invest in key infrastructure, key sectors to essentially enable the development, innovation that they need to essentially springboard the economic activity in the country. So that is obviously something that is somewhat incentivized by the recent past situation for Ethiopia. But I would also like to flag, I think there are also a few other countries I think I've also seen at AFSIC that are trying to make a case for themselves because it is important to get that foreign capital injection into the economy.
Right. So definitely hoping most of these businesses, they're able to attract, all of the investment they need, and hoping that it's going to be a successful event. Thank you so much, Abdulrahim, co-founder STAIRS. It was great having you today.
Thank you.
All right, now let's still stay in London. We have our correspondent right there, Juliana. Great to have you, Juliana. Good morning. So how are the markets in London kicking off today? We see oil prices jumping. This morning I see most markets reacting to the Israel-Hamas conflict. How's it looking over there?
That's absolutely right. Good morning, Laddie. The markets have been rocked by the events unfolding in Israel over the weekend. Quite shocking, and we're likely to see more market reactions as the weeks go on. I think the first thing to talk about, of course, is a barrel of Brent crude. We know that is the benchmark. It has been soaring over the past couple of days. I believe a barrel now is just shy of about $88. That has, of course, sent the oil majors right up. So BP, their share price this morning is up 2.5%. Shell is up 2.7%. On the flip side, of course, this is affecting airlines. Not only are we seeing a lot of airlines that were flying into Tel Aviv shutting down that airspace, several airlines are no longer going to be flying into Israel for obvious reasons. That's really affected airlines this morning. IAG, which is the parent company of British Airways, their shares are down 5.1% at early trading. EasyJet, the budget airline, their shares are down 5.5%. And Wizz Air, which is the Hungarian flagship carrier, their shares have tumbled at about 7%. Currently now we've got the British Prime Minister, Rishi Sunak, delivering a COBRA meeting. They're talking about putting extra security on the streets of the United Kingdom. There have been serious tensions in particular parts of London overnight, and this is all having a series of a cause of effect. As we said, there have been some shocking events taking place over the weekend, but the major benefactor of this situation is, of course, the oil sector.
Right. And what market-moving data should we be expecting this week?
But of course, we're going to be keeping a close eye on what's been happening in the Middle East. This is going to have global ramifications, particularly on oil. The energy market is already feeling the pinch because of what's been happening in Ukraine. But of course, because of the supply that comes out of the Middle East, certainly if events do escalate, we can certainly expect market-moving data from there. On Thursday, more domestically, we're having GDP data for the month of August. We're expecting that data from the Office for National Statistics to show that the UK economy contracted by between 0.3 and 0.5% in the month of August. This is not good because we know that we are teetering on a recession. And the big news in the UK this week, apart from GDP data on Thursday, is the Labour Party conference. This is currently ongoing. Now, we had the Conservative Party conference last week. Rishi Sunak gave a pretty decent, shall we say, a keynote address. Now we're going to be waiting to hear from Sir Keir Starmer, the Labour opposition leader, who has been called a Prime Minister in waiting. If you look at all the polls indicate that at the next election, the Labour Party will be getting into power. So a lot of people, including the US President, including Israel, they are going to be taking a very close eye to hear what the Labour Party have to say on the situation between Israel and Palestine. So, yeah, it's going to be a busy week for us as always.
Right, busy
and then, of
week.
Course, IMF, World Bank spring meetings in Marrakech.
Right, definitely. We're going to be talking about that next. Thank you so much, Juliana. Always great to have you. Thank you.
Thank you.
And talking about the World Bank and IMF meetings right there in Marrakech, we have our very own Ini John McQuarrie. She's right there right now. And Ini, great to have you. Ini, good morning. Okay, we're going to try and get back Ini very soon. And definitely she's going to be bringing us up to date on what's going on right there. Definitely a lot of conversations about economic development, global economic development, and all of that. So we're going to be getting all those details, and she's going to be giving us a report on how it's playing out right there. So let's look at all the markets. Now we see right there the local bourse talking about the equities market there. It's not looking so bad. Last week it did close with a 0.11% gain last week, and definitely be looking forward to how it closes right there to this week. Hopefully we'll get another positive close there. So we see the all-share index for last week, 0.11%, 66,454 points. That's what we're seeing for the market last week close. Equity cap, 36.51 trillion, up 0.49%. We see the all-share index there. That was yesterday at about 66,000. Let's look at other parts of the market now. We see the activity there, volume, 2.41 billion there, up 80% for the week last week, 22.11 billion. That's the value of stocks traded there, up 23.4%. And we see deals, 27,965 deals. That's what we had last week. And if we look at the sectoral performance now, we see the sectors, more of a consumer goods was looking good for last week. We saw the industrial, that didn't pan out well, last week. If we look at the sectors now, we see the sectoral performance in the market, not looking bad, with oil and gas still unchanged. That's talking about the sectoral performance. Let's try and get, yeah, that's it there. Industrial goods, 1.38% down. Insurance, big drop for the insurance counter, 3.11%. We see banking up 1.43% for the week last week. Consumer goods also up 0.17%. Let's bring in Onome Aworle, a lead analyst at Money Africa. Hello, Onome. Great to have you.
Good morning, and thank you for having me.
Fantastic, Onome. So, yeah, definitely we had a positive close last week for the local bourse. What are you expecting for this week?
I think for this week, I expect either a marginal gain or a marginal loss, because till we see Q3 numbers, I think the markets don't have any stimulus. So there's nothing really going to move the market strongly upwards or downwards.
The bulls and the bears, what do you think investors will be interested in the markets going into this week? We did get a listing, a new listing last week. How are you expecting investors to react to that listing this week?
I think there's still some excitement around the stock. So definitely, at least in the next few weeks, you're going to see positive movement. But the real catalyst are Q3 numbers. So how they come in, good or bad, to determine the direction of the market.
Right. And are you looking at any stocks that you think are going to shine this week?
At the moment, none. Beyond VFD, which is the obvious one, because there's still some buzz around it. It's hard to say any stock that will have any traction around.
A lot to look out for this week, and we're seeing how investors are going to play out, if it's going to be a bullish or a bearish week. Thank you so much, Onome, for your update. Thank you.
Thank you for having me.
Right, so there you have it. We might be expecting maybe a marginal gain this week for the Nigeria stock market there. And definitely I'll be keeping my eyes on that liquid counter, that's the banking counter, see how it plays out. Top trades for last week, we had Nimeth there, Universal Insurance and Fidelity. That's in the financial services sector there. They topped the trades for last week. We're looking at seeing which trades are going to top also for this week. And for the top gainers, we see FTN Cocoa Processors, had an incredible first half of 2023. And top gainers for last week, 19.21%. RT Briscoe, 57 kobo. That's 16.3% close. So investors that bought this actually did well. For the top losers counter, Consolidated Hallmark Insurance, 1 naira 2 kobo there, 19.05%. Big drop there for the week last week. And we see ABC, 65 kobo, 17.22%. And UPDC, 3 naira 50 kobo, down 10.26%. So that's how the market, the local bourse played out last week. So now let's head on to other markets. Now let's take a look at what's happening with the crypto market. We see Bitcoin started a downside correction after it failed to clear the $28,500 resistance zone. BTC declined below the 28,000 level and tested the 27,200 support zone there. 27,901 this morning. That's the price of Bitcoin, down 0.32%. So starting off the week on a low note, this time Ethereum, $1,630, 0.19%. The native coin for the Binance exchange, top exchange, the world there, $211, down 0.12%. So we're seeing negatives across board for the top cryptocurrencies we track. XRP, 51 cents. They look like we're starting some kind of bullish run last week and over the weekend, but now we're seeing the pullback, some profit taking already. Did see some resistance zone around 55 cents. We're seeing it down 1.44% and not gone to that level yet. We'll see if it's going to have another try at that. Little Dow's topping the gainers counter this morning at 8 a.m. $1.61, 2.57%. We're seeing single-digit gains for the morning. Elron, $24.45, 0.99% up. Let's see if we have Michael Inaji now, financial market analyst. Good morning, Michael. All right, we'll try and get Michael again there. So see, took a look at the top gains. Got the IOTA 15 cents, 0.92%. And we'll see MakerDAO MKR there, $1,414.50, down 0.90%. So definitely a lot to look out for this week in the markets. Traders and investors are going to be looking out for what's going to be happening definitely in the U.S. and some major global data we'll be expecting. That's going to drive sentiment in the market. And also I got my eyes on the DXY, see if there's going to be any strengthening. Let's see if we can get Ini right now. Hello, Ini.
Hey, Ladi.
Fantastic.
How's this going right there in Nigeria? Well, I can tell you that you're missing out right here at Marrakech. This is where the world is. This is where all eyes are at this time. Journalists from all over the world are here. And after that threat of the earthquake, the meeting, the IMF and World Bank meeting, the second one for the year, we're still holding here at Marrakech. And it's a busy one. This is the registration center. And we have a lot of journalists, world leaders. The meeting just starts today. Today we have, for instance, one of the meetings that we're going to have is going to be on Africa. We're going to have the MD of IMF meet with some Nigerians like Mo Abudu, and we hope to bring that report to you later on today. We also have the deputies of G24. They will also be here. And the topic here is about how to make global economy resilient, because global economy has gone through a whole lot. COVID-19, the war that's still going on in Ukraine, the threats to food security. Obviously, world leaders believe that what the world should be discussing at this time is how to make economies more resilient. And of course, the special attention is given to emerging economies. The issue of debt and the request for restructuring of debt is also still there. And so it's going to be a full week right there at Marrakech in Morocco. And well, we promise to go down here, bring you updates of it. But I can tell you that so many serious discussions are going on here, not just climate change. There's the innovation, there's one for youth. So it's going to be a full week, and we'll stay on our toes to ensure that you get all the information.
Right. I know Ini is going to be bringing us all of that information right there from Marrakech. And Ini, definitely today is going to kick off in a high note. What are you expecting today that's going to dominate conversation? We know right now geopolitics is top on the agenda.
Now, the geopolitics is right there. Why one of the major topics at the conference would be is global resilience, economic resilience. Because what has happened, obviously, is that the war in Ukraine has created a lot of divide between countries, different parts of the world, has threatened food security because both Russia and Ukraine are major contributors to grain, especially. And that's, of course, is starving, especially the young economies, the emerging economies, mostly in Africa, starving them of food that they could get at good rates. So that will be one of the conversations. I know one major meeting today will be the last of the G24. They have their major meeting with the minister. They said our minister of finance will be there tomorrow, but the deputies are meeting to set the agenda and get all of that ready. But the top on the list study is making economies, global economies, resilient to all of the shocks coming between inflation, debt, interest rates. They are top on the list, and from different parts of the world, we expect to get different perspectives and suggestions on how they could solve this, move forward with the problems and challenges that economies are facing.
All right, thank you so much, Ini, right there in Marrakech for the IMF and World Bank meeting, the annual meeting right there in Marrakech. And definitely, Ini is going to be bringing us all the details because she's live in Marrakech. Thank you so much, Ini.
Thank you, Ladi, and well done.
All right, now let's head back to the markets now. Yeah, we did look at the top losers counter. AVAX, they're topping the counter, $9.97. Cents, down 3.54%. TWT 99 cents, losing that $1 mark there, down 2.94%. So we're seeing investors in the crypto market still looking out for cues on what's going to happen next with forward guidance, talking about the interest rate hikes going forward. Everyone's still tracking SBF, their Sam Bankman-Fried's trial. That's also top on the agenda and definitely going to be shaping, sentiments and a wallet that's not been moved for a long time did move some Bitcoin. We're going to talk about how that's going to impact the market going forward. Let's try and get Michael Naji now, financial market analyst. Hello, Michael.
Good morning, Ladi.
Good morning, Michael. Fantastic. So what are you expecting for Bitcoin price action this week?
Well, proponents would like to say that it's the beginning of October. Basically up in October. Historically, Bitcoin has shown that in Q4, it tends to go up to the have a positive return in the months ending in December, November, and October. So most likely you see a trend to the upside. Technically speaking, there is indication that we're set for a move to 40K. However, though, with all the economic issues on the horizon, sometimes it doesn't look likely, but it looks like Bitcoin wants to go higher, and the technical indication is there for it.
Right, and we see there might be some risk to that, which you just mentioned, that move to 40K. We see a whale transferred $137 million in Bitcoin, and that wallet has not moved for about 3 years. How do you see that impacting the market?
It could be that they're trying to sell the Bitcoin, but moves like that don't really bother me, in the sense that Michael Saylor has bought billions of dollars worth of Bitcoin. He is probably the biggest mover on the tape. In terms of volume, he's probably the single largest buyer. So in terms of his ability to move the market, he buys billions of dollars of Bitcoin and over a period of time, and yet the market only goes up $2,000-3,000 in the last month or so. So someone selling a lot of Bitcoin is an issue because we've proven that we can absorb also a lot of money. So as much as there's someone who has a massive wallet to sell, there's still an insatiable demand for Bitcoin, and that will eat through that $137 million.
Right, I guess the market has the capacity to absorb that, according to Michael. But let's look at SBF now. The former owner of FTX Exchange is on trial right now. What are you hearing right now? Any market-moving information coming out from the trial?
No, the only thing that I am hearing is SBF is going to be doing time, a lot of it. Unfortunately, because of how he was extradited, they have to charge him on the charges that was brought forth to the extradition. There's the opinion that this might not be the only court battle the SBF has. Even if he does get indicted for this one, there's going to be more charges. There's going to be fraud charges. There's going to be campaign finance charges. There's going to be a litany of charges coming to SBF. Most likely, they're going to try and make an example of him. He's the first fraud conviction on a massive scale for crypto. I wouldn't be surprised if he gets hit with 20, 30, 40 plus years.
Wow, definitely. That's definitely a long time, and nobody will want to do anything quite illegal in this market if that actually happens. But talk to me now about market-moving data. What do you think is going to come out this week that might shape investor sentiment in the market?
Frankly speaking, I think investor sentiment is already at an all-time low. I think based on all the news that were coming out, savings rates have been depleted for consumers. You're seeing basically in Canada, you're seeing 25% of all mortgages in what we call negative amortization. Basically, people are just paying down interest and not paying principal at all because of the interest rate adjustments. Globally, you're seeing consumers getting poorer. So there's not going to be any new economic data that's going to come that's going to change that. It's just going to be data that's going to come out is going to agree with that. So that's one of the issues that I have with seeing Bitcoin at 40K is globally speaking, consumers are tapped out. So it's going to be really interesting to see where that extra demand comes from that's going to drive us up. It could just be as a result of Bitcoin basically being quote-unquote dead and it taking not that much to move it up. So it could be a function of it's liquidity has dried up, so what it takes to move the market up isn't that much. Right. So it's going to be really tough to crack that 40K. But the technical setup is there. It's just a function of what it was going to be the catalyst. Most likely it's going to be more good news, hopefully. Right. That just keeps coming out. But right now it does look technically there. The question is, what's the story that's going to paint us there?
What's the story? Definitely looking out for that story. Thank you so much, Michael and Naji, financial market analyst. Thank you.
My pleasure. Have a great day, Ladi.
You too. All right, so that's the show today. That's how the market is looking. Still looking for direction, talking about crypto market. Don't forget, you can visit us on www.channelstv.com for more updates. You can also follow us on social media at Channels TV. From me and the team, right here from Channels HQ Lagos, it's bye for now.